rectification of errors. This is our topic. And in this topic, we will discuss those types of errors which do not cause any difference in the agreement of trial balance. Okay? So please be attentive. The learning is very important of such errors, because you know very well that what do we say? Trial balance agree? Okay, no worries. No, there could be some worries. So let's see what are those worries. Error of omission means when financial information is completely omitted. Okay, when financial information is completely omitted from recording in the books of original entry. So it's altogether omitted. The example is that there is a sales invoice of 1,000. Okay, there is a sales invoice of 1,000 which we could not record. Okay, so the original entry that we were supposed to record for this sales invoice was not recorded. So the same would be recorded. Then debtors account would be debited and sales account will be credited with 1,000. So this is its rectifying accounting entry. Okay, well, the second is error of commission. We have committed an error while recording the entry. And what is the issue? That when we were recording the entry, correct accounting effect debit or credit was given in the wrong accounting head. Okay, the selection of head is wrong, but main head remained correct. Well, so let's see what is its example. Purchase of computer 5,000 for office use was wrongly debited to the furniture account. Okay, so what the issue? Both accounts belong to the main head asset. Okay, so in fact we had to debit computer as an asset, but we debited furniture as an asset. So this error will have no effect on financial position or even on financial performance. But remember, when we will be working out its depreciation, the depreciation, if useful life is different, then obviously financial performance will affect, means our profitability will affect. And the second thing is, when we are having our assets in the books of accounts, at the same time we prepare asset register. So the financial statements and the asset register in which physically the assets are recorded, both should give equal information, the same information. Well, the thing is, let me give you a tip, that whenever this type of situation is there, pass the correct accounting entry. What was the correct original entry? That was in fact computer debit and cash credit. Okay, so what wrong we did? The wrong that we did was furniture debit and cash credit. Okay, this is the wrong that we did. So now cash, in the wrong entry, cash was correctly credited. So there is no issue with the credit effect. We have this thing same, which was supposed to be done and which has done. This is something that we have passed in our accounting books. So cash has correctly been recorded. Furniture was wrongly debited. So now we will credit this furniture account. It will rectify this issue. And computer was not debited, and now we will debit this computer account. This will rectify our accounting records. Okay, well, Very good. If you have understood this, this is excellent. Okay. The next thing is also somewhat similar to this, but over here in this error of principle, we choose wrong accounting head as well as the wrong main head. Okay. For example, the purchase of computer of 5,000 for office use was wrongly debited to stationery account. So computers are asset and stationery is expense. So instead of debiting the computer asset, we debited to the stationery expense. So expenses will be overstated, which will reduce our profit, and assets would be understated. So this is something which will affect our financial performance as well as the financial position. Okay. Well, again, just apply the same technique. Pass correct accounting entry and then pass wrong accounting entry. Let's see. What was the correct entry to be passed? Computer should have been debited with cash. Okay. And what wrong we have done in our books of accounts? That is, stationery was wrongly debited with credit to cash. So the common thing, cash is correctly recorded in the wrong entry. So no issues with this cash effect. This stationery is wrongly debited. So what we will do, we will credit this stationery account, and the computer was not debited. So we will debit this computer account with the same amount. So this will rectify our accounting records. And this is the error of principle. Why we call it error of principle? Because principally this is wrong. Our accounting is wrong because of the decision that we took wrong. We considered it as if it is a revenue expenditure, whereas this was in fact a capital nature of expenditure. Okay. Well, so this was the error of principle. Now comes error of original entry. Error of original entry is the error when correct accounting entry is recorded. Okay, accounting entry is correct in the books of accounts, but the amount in both of the accounting effects, debit and credit, is wrong. Okay. For example, debtors to be written off for 250 rupees as bad were recorded in the correct accounts. Means bad debts were correctly debited and debtors were correctly credited. Okay, this is its accounting entry. Okay, with 250, instead of doing this with 250, it is over here. Bad debts were recorded in the correct account, but the amount was posted in both accounts 520. So what happened? It is causing a difference of 270 in both sides. So correct was just record this correct. The correct was to be debited with 250 and credit with 250. But what wrong we did? We debited this with 520 and credited with 520. Okay. So what is the issue? The issue is bad debts have been debited with more amount and debtors have been credited with more amount. How much more? 270. So now the debtors will be reversed by doing debit 270 and bad debts will be reversed by giving credit with 270. It will rectify our error. I trust you are getting the issues very smartly. Thank you. And now next comes compensating error. When the sum of more than one errors cancels the accounting effect of each other. Okay. Sum, the total of more than one errors. Okay. is being cancelled with a reciprocal effect. Example is that sales were less credited with 260. At the same time, opening balance of capital account was brought forward with an amount that is 200 more than the correct amount. And rent expense owing of 60 was although credited to rent payable account but was not debited to the rent expense. Not debited to the rent expense. So, let's see. Sales were less credited with 260. So, the only effect is that we have to credit sales account with 260. It will rectify the issue of this error. And at the same time, the second thing is opening balance of capital account was brought forward with an amount that is 200 more than the correct amount. We know very well that the nature of capital account is credit. If we have put 200 more in the opening balance of capital account, now we have to reduce it. In order to reduce the capital balance, we have to give debit effect to the capital account. Agreed? Very well. And rent expense owing 60 rupees was although credited to the rent payable, correct amount has been credited to the rent payable account but was not debited to the rent expense. We forgot to make this debit entry in the rent expense. So now this rent expense will be debited with 60. So we see there are three different errors which are in fact compensating. The debit effect is being compensated with the credit effect. Debit effect is 260 and the credit effect is 260. So by doing this, we see that our compensating error is also rectified. Sum of debit is equal to the sum of credit. So the ITTRs in this module are that trial balance agreement doesn't mean that there is no error in our accounting or our accounting is error free. Remember, whenever the trial balance is tally, even then we have to be vigilant about these few errors which may arise or which may be present in that trial balance, which is agree in terms of debit and credit. Thank you very much.